Hi there, good afternoon. You're watching Closing Trades on ET Now. I am Snehi Shah. With me is Harsh Saita, and you are catching us live from the Suzlon studio here at ET Now. And it's been a tumultuous day for the market, and we've seen a one-way decline coming in on the market. In fact, in the last couple of hours, we've seen a sharper fall coming in after we've seen comments coming in from both Iran as well as Donald Trump. Yes, he has said that they have attacked Iran very vigorously and aggressively last evening. That's the kind of fall that we're seeing in the market right now. 1.7% lower for the Nifty, and we have even slipped below the 24,000 mark. In a span of just two trading sessions, we are more than 500 points lower on the Nifty, because remember, yesterday's high was 24,520, and today we're even struggling to hold on to the 24,000 mark on the Nifty. So it's a sharp fall of 500 points in two trading sessions, of which 408 points is something that we're seeing today in terms of declines. Sensex too lower by 1.7%. It's a 1,300 point cut coming in on the Sensex as we speak. It's the India VIX that you should be looking out for, because the spike over there is to the tune of 23%. Take a look at that spike in the last couple of minutes on the India VIX as well. 23% higher, 14.3 is where we are at. The broader end of the market that was holding to some amount of resilience, it was holding on to very minor cuts, has now seen very sharper cuts in tune with the Nifty. A very sharp cut over there, 1.25% lower, both for the Nifty mid-cap and small-cap indexes. When I take a look at the sectoral churn, for most part of the day, you had some good moves coming in on pharma as well as IT that was flat, but pharma was showing some strength. All of that has changed course now. You have all sectors trading in the red, with the biggest cut coming in on Nifty PSU banks. It's a 2% cut on that note. BOI, Union Bank, Bank of Baroda, PNB, all of them seeing cuts between 2 and 4% each. This followed by Nifty FMCG has been one of the top losers all throughout the day. Tata Consumer lower by 3%, HUL, Dabur, Colgate, United Breweries all follow. Then you have Nifty Oil and Gas, Finance, Bank, Media, Auto, Defense, all of them under pressure. And of course, on the back of the spike that we've seen in crude prices, you've got some of the OMCs like HPCL, BPCL, IOC. They are some of the biggest laggards when it comes to the Nifty 500 group of stocks. Just want to see what the tilt in the broader end of the market is. For the Nifty 500, you have a mere 72 stocks that are in the green, with 430 stocks about in the red as we speak. The biggest cuts on Aegis Logistics, Aegis Vopak, both of them continue to be top losers for multiple days in a row now. HFCL, Emphasis, 361, Geo Financial, all of these are seeing cuts to the tune of 4 to 6% each. On the flip side, on the back of the profit taking that we had seen in Kalyan yesterday on the back of a very weak Q1 update, there has been some reversal, and the dip seems to have been bought into, because Kalyan Jewellers is higher by about 7%. Anantraj doing well with a 3% gain, as is the case with Nalco, Chennai Petroleum, as well as IFCI. That's the move coming in right now on the market. But let's connect with Peter Maguire, who has joined us on such short notice right now. Peter Maguire, CEO of australiatrading.com. Peter, hi, first of all, thank you so much for your time. Thanks so much for joining us at such short notice. What are you making of these comments that we're seeing coming in from both parties, US as well as Iran? You've got US's comments. Trump has said that they've had some great meetings. They've attacked Iran very powerfully last night, and Iran shot at ships, which is why US instigated this attack. He's made a whole lot of comments on NATO as well. First of all, how are you reading into these comments, and what impact do you think it's going to have on oil especially?
Well, Snehi, I've got to say a couple of things. First off, we've got to look at price. And price is the determinant from the actions and the reactions, and naturally President Trump's comments. And I've got to, we're up 4.5% for WTI and Brent. So they're big moves to the upside after what we experienced last night in New York. So I take on board his comments as far as NATO and Turkey. He's certainly, it's a little bit of saber rattling on many fronts. And it's going to be, again, interesting over the next 24 to 36 hours what the market perceives as far as market sentiment. Is it going to be further bullishness? And what's going to be the reaction and the time frame from anything from Iran? So everyone's sitting there, everyone's long at the moment because of the geopolitical tensions, and we've just got to see how long that this particular situation, whether it creates more turbulence or it settles down. That's the unknown.
Hi, this is Harsh also joining in. The key here being we've gotten used to everything that's played out already, right? Given the way things have played out over the last couple of months, we've gotten used to the Strait of Hormuz being closed, for example. How much of a dent, this 5% uptick on Brent, do you believe it goes back to 85? Do you believe it goes back to 90? Where do we settle in at? Because no longer an unusual situation, if I can call it that.
Well, exactly, Hirsch. And, we all understand what we've lived through. Everyone's lived through in the last 3 to 4 months. We're very mindful as far as the current situation, how it can really escalate quickly. Is 85 possible? I'm going 80, and I think 80 is probably a lot easier to get to 80 than it is to 70. So I feel as though a couple of dollars. Let's review it in the next matter of days and see whether this has got more horsepower to the upside and that's going to be reaction time. So what Iran does, what comments further come out from President Trump and his administration, and what the market deems. I want to see what happens in New York tonight. That's going to be the telltale, whether it actually goes further to the upside or it takes a little bit of a breather. And at the moment, everyone's long.
Note, what would your prediction be on how much oil can spike before there is some sort of cool off once again? We've seen Brent reach close to $70 a barrel level, and after that it's spiked up once again. As of now, it's a 5% spike, and close to $78 a barrel is where Brent is. Any projections that you have newly built in to accommodate this situation that we're seeing brewing right now?
Well, over the next couple of days, I wouldn't be surprised to take an 80 to, say, $81 out. Let's just see. But, that's still a fair way to move, but it could happen very quickly because if things magnify and this creates more turbulence, more uncertainty, market sentiment, all of these factors with geopolitical, it's a bit unhinged at the moment. We've just got to see whether this has got the capacity to push higher from that. But, we're all watching the screens. We're all participating and understanding that it seems to be far more bullish than bearish at the moment. And, it's been a very dynamic last, 18 hours on the market.
You're penciling in $81 to $82 a barrel for Brent. What would your projection be for precious commodities, gold and silver? Usually when equity markets are under pressure, you've seen commodities do well, but so far that has not been the case for gold and silver, who've continuously been seeing a softening trend. Do you believe this event right now could lead to a reversal and maybe we could see some strength back on gold?
Well, I want to see what happens as far as US bond rates, the 4.55 for a 10-year. I want to see what happens with US dollar index as well and where the equity markets trend tonight. Gold, it's been very range bound. It's been tight channel down to 3,900, back to 4,200. If it breaks out to above 4,250, then I'm going to be interested. But at the short term, I'm still sitting here just observing and looking at what all the other factors, how they create, again, either the horsepower to push gold higher, or do we go and just see it stay range bound with its silver as well?
Okay. Peter, thank you so much for coming in and giving us that perspective. Another 5 to 6% essentially is what Peter sees on crude. And generally listen to Peter because he tracks some of these trends very, very closely, right? But 2% lower on the Nifty as a result of all that we're seeing. 79 or closing in on 78.5 on Brent is what the current latest is with regard to crude. But we'll track that and more. What we'll do is to in a very short break, come back. Kunal Bothra will join us with regard to the technicals of this market, try and get a sense of what levels he's looking for. He was bearish this morning, mind you, viewers. So some insight from him on what he's seeing with regard to the market currently. But 23,900 is what we're seeing on the Nifty right now. Stay tuned, more action on the other side.
back with closing trades, and of course, you're catching us live from the Suzlon studio here at ET Now. Joining us in the show is also Kunal Bothra. He's joined us in the studio. Kunal, good afternoon. Before we go to Kunal, let's take it across to my colleague Avi, who's joined us to give us a lowdown on which stock should you be watching out for in trade right now. Where is all the action in the market? Avi, over to you.
The markets have suddenly seen a huge sell-off post-Trump's comment on Iran, but some of the trending in trade are embassy developers who have come in with a Q1 business update, and the pre-sales numbers are very good at around 868 crore rupees for Q1, which is a growth of a mega 338% on a yearly basis. The collections have also come in at 500 crore rupees, which is up by 50%. Up next is Orchid Pharma, which has entered into a licensing agreement with Pharma Synthes to supply a drug used in the treatment of UTI and kidney diseases. Up next is Pondy Oxides, which is seeing some buying inflows since it has decided the record date of 21st July to identify eligible shareholders for the stock split. Every 2 equity shares of Pondy Oxides will receive 5 equity shares as the stock gets into a split. Up next is Idea Forge that has announced its 500 crore rupees QIP at the floor price of around 835 rupees, on which they can give a maximum discount of 5%. Also important to note that they came out with their IPO at 762 rupees 3 years back. Our last pick would be Uno Minda, which has announced a 320 crore rupees greenfield expansion for the passenger vehicle sitting capacity, and they will add around 240,000 sitting capacity on a yearly basis. This shall get commissioned by Q4 FY28 and shall ramp up by FY31. So these are the stocks that are trending in news.
All right, thank you so much for that, Avi. Let me go across to Kunal. Kunal, 2% fall on the index itself. How are you looking at this?
Yeah, I think after this kind of a news flow, I think we're back again to that Feb-March mode for the indices. Hopefully it just lasts for maybe a day or two only for the indices. But then, these are the kind of circumstances and the scenarios where, the market suddenly gets into a bit of a shock or a surprise. And the reaction is, what you see on screen. The bigger concern for the markets is that I was looking at many of the other asset classes, the sudden spike in dollar index, a fall in many global currencies, etc. So it's cascading towards many of the other asset classes, which are also falling, rising in the context of the kind of comments which has come in. The difficult aspect is that the sharp spike in India VIX. I think at the last I'd seen there was almost like a 27 or 28% spike in the India VIX. Now that's a kind of a steep rise which you see on a single day. Thankfully, I think it just happened during the market hours. And that's why you're not seeing a major kind of a gap. But otherwise, I think, these kind of indications back again, that risk has come back into the markets. And whenever the risk gets repriced into the markets, you generally see the markets ebbing off from the swing highs and then coming back towards a moderate level. The moderate level now looks to be at 23,750, 850 levels for the index.
Okay, that's on the index right now. Just taking a look at what else is buzzing in the market from the broader end of the market, Kunal, for at least the first half of the trading day. You did have some show of strength coming in over there because the cuts were there, of course, but they were very mild. Now take a look at the Nifty mid-cap, small-cap. It's in excess of a 1% cut that we're seeing on both of those indexes as well. And if I take a look at the advanced decline ratio on Nifty 50, there's 50 stocks in the green and 450 in the red. What are you making of this tilt that we're seeing in the broader end?
Yeah, again, I think it's in a similar context. When risk suddenly gets priced into the markets, the market's taken a bit of a shock or a surprise, and you see the mid cap, small cap. So, it's basically traders and investors coming back into that risk aversion mode. And whenever there's a risk aversion mode, you see these kind of instances where, for a certain period of time, you see a sudden withdrawal of positions from performing sectors, underperforming sectors, all in similar cases. So I think we are looking at that kind of a hint. That's why I would believe that hopefully it just lasts maybe a day or two odd. And if it settles down very quickly for the next couple of days, then maybe we could probably find a floor for the index at the 23,750 levels. You look at the mid-cap index. I was actually looking at the Nifty mid-cap index, Nifty mid-cap 50 chart. And over the last 4 or 5 days or so, we were unable to surpass the levels of 18,000 on the Nifty mid-cap index, even though the market or the Nifty benchmark indices had seen almost like a 600 to 800 point recovery in the past few days. So even in that context, the mid-cap index did not manage to break out of its previous resistances. And now with this kind of a repricing of risk back again, I think the mid-cap index is seeing some bit of profit booking. So I believe that this extent of profit booking on the mid-caps could continue for the next couple of days at least.
Another 200 odd points. That's the kind of fall you're seeing from here, Kunal. Banks, how would they fare in your opinion? Will they really lead this 200-point fall if at all it were to play through?
It has to be a mix of sectors, So I think the sectors which have performed very well, they are the ones which could see a strong bout of profit booking. So, for example, in excess of 30-40%, if a sector has rallied, then you're bound to see some bit of profit booking or correction into that sector. Then look at the context of the banking index. I think ICICI Bank, HDFC Bank, they had shown almost like a 15% plus kind of a rally from their recent swing lows comparatively over the last 1.5 odd month. And in the context of the last, I think, 3 months, 6 months or 1 year time frame, these stocks had been down and out. So for traders who have cashed in maybe 10-15% as a profit, they would probably try to just about protect their profits, take some chips off the table, try to reposition the position size as well as the risk into these names. So banks at large, I think, would also be one of the sectors where you might see more of profit booking. But what happens is it's very early to try and price in and say that the markets would go into a full-scale reversal. Initially, the bout is that try and take some chips off the table, reassess the situation, let it take another couple of days. Once the data point starts to correlate, that's where you might probably expect a trend in the making. So as of now, it's too early to call in that we are looking at a major corrective phase back again. That's why I have kept the targets just about 150 to 200 points downside only.
Okay. All right. Let me go across. Nimesh Chandan joining us, CIO at Bajaj Asset Management. Take a pause on the conversation with Kunal. Nimesh, great having you. It's been a while. And frankly, it's a good time to have you simply from a perspective that you look at the domestics and you look at consumption in a big way. And some of those numbers, it's always good to zoom out and kind of focus in on really performance and results rather than about everything that's happening in markets live, right? So give us a sense. How are you looking at some of those numbers? Value retail has come out with numbers. You've got the likes of Marico, a Trent. I'm not going to ask you stock specific. How are you looking at consumption trends at this point?
Hi, good afternoon, and happy to be here on your show.
Very good afternoon.
And a day to be here. So let me put it this way: when we were in the midst of the conflict in March, and when we were looking at oil prices going up, some kind of oil prices also passed on to the Indian consumer. Then things started getting a little better in April and May, and we thought this quarter will be a write-off because you will see so many businesses having either shortage of energy or impact of inflation coming there. And then we had the El Nino talks also. But considering all that, the quarter has actually gone quite well. The initial updates that have come from banks, from some of the consumer companies are actually quite good. And it's not specific to some segments only. Yes, jewelry has done fantastically well. But across the board, if you see grocers, if you see quick commerce, if you look at real estate, automobiles, so things are actually looking up. And the economy seems to have absorbed the problems that were there because of the Middle Eastern crisis. In fact, I think we'll have a very good festive season going forward, considering the way we are doing in the first quarter in terms of updates. And we are quite bullish on the market overall. But specifically for domestic markets, the economy and businesses are doing well. And this year and next year also, we will see good earnings growth. Specifically Nifty, where earnings growth was missing. For domestic sectors contributing the way they are, I think we will do very well.
Nimesh, hi, good afternoon. This is Snehi also joining in. It's a particularly good day to be speaking with you because, very recently you've shared your view that you're looking at Nifty touching 27,000. On a day like this where we're seeing almost a 2% shave off coming in across the board, does that view hold?
So when we were at a high in September 2024, and if somebody said caution that let's look at valuations, let's be a little more skeptical about the kind of rally that we've had in mid caps and small caps, and we were laughed at that time. And now when actually things are turning around, things are looking very bullish. If I'm making a bullish comment, actually I get trolled a lot on that. But that's how markets are. And it pays to be contrarian. The most profitable opportunities come when you look at a contrarian view. Not that you have to have a stubborn dissent to what the crowd is saying, but using fundamentals, understanding crowd behavior, it looks like, see, we are at probably the end of the crisis. I mean, today's comments are in a way some kind of frustration that the president of US is showing, and he's very vocal online in social media about it. So that's why the market got spooked. But it looks like the traffic in Hormuz is normalizing very well. The oil producing nations are saying they will increase output. In fact, they are worried about demand, so they are actually cutting prices. And with India, we are so well placed with various nations, oil producing nations, that we are getting our supply well. We have been able to get through this majority of this crisis well. So we are towards the fag end. Yeah, I don't know exactly which date it will end, but these are opportunities. I don't think these are times to worry. At least what the facts that are on the table right now. If they change substantially, then I will change my view. But so far, view on 27,000 Nifty fair value continues.
Point. Nimesh, since you are playing contrarian and since you are saying that it's a good time to go out and buy, what is it that's looking the best at this point?
So we have actually placed our portfolios in two different buckets. The one half is looking at cyclicals, so financials, industrials, and materials. The second bucket is looking at mega trends, where companies, say in healthcare, in consumer discretionary, beneficiaries of AI and data centers, those areas we are looking at. So it's a good split between value and growth, or cyclicals and mega trends. And there are many things to play with here. I mean, so many things at attractive levels in the broad market as well as in the large caps. Within financials, we like private banks, we like some NBFCs. Within industrials, we like defense, we like power, we like auto ancillaries. Within materials, we like cement, we like metals. And healthcare, hospitals, as well as pharmaceuticals are doing very well. Specifically, CDMO or CRAMS companies are doing extremely well. The results are also coming out quite good with that segment. And lastly, consumer discretionary. We have seen a pickup in consumer spending. We are yet to see the full impact of income effect because of income tax rate cuts, savings effect because of the GST cuts, wealth effect because of the gold prices moving up, and also interest rates coming down in the economy. So all the fuel has gone in. We are just waiting for it to charge the vehicle ahead. Sentiment should turn. I think if the sentiment turns, the market will touch a new high.
And spike in crude, Nimesh, what's the impact of that on ground, on earnings that you're estimating? You've spoken about all of these sectors. I'll probably try and dissect some of those as well in terms of asking you for views. But talk to us about the earnings impact, because earnings have been a drag last couple of financial years. That's one of the other reasons why FI seem to be exiting and all of the pressure with regard to the index as well. How do you see earnings growth given the fact that you're seeing crude again head towards $80? It's real time. But what happens if, say, crude stays at 80?
So one of the trends I've seen recently is that we are letting the flows data impact our fundamental view. It should be the other way around. We should be looking at fundamental view and then deciding whether flows have come and the valuations have moved up. So, yes, there was a time when we were seeing some kind of earnings cut, slowdown coming in, and then we were seeing outflows also. But you have to keep in mind, between 2020 and September of 2024, India had outperformed emerging markets by 75%. And at that time, we were not seeing that how many countries we are crossing or how many countries we are bigger than in terms of market cap. When the flow started turning negative because valuations were high and earnings were getting cut, yes, there was some impact of that. And last year has been a very eventful year. There have been wars, there have been tariff negotiations, there have been tantrums. So we've gone through all of that. We are at the fag end of the problems and probably just about ending them. And so much positive has come from the government side, from the RBI side. I think the positives are not yet priced. The negatives are probably in the price. Regarding crude, if you see at least last 1 month, whenever there is a negative news about crude, it moves up less. And whenever there is a positive, moving towards resolution, the crude falls even sharper. So this is showing you the kind of sentiment in the crude markets, that we are seeing less bullishness on crude prices when things are going wrong. and more bearishness when things are going right, which means the trend is towards the down. Yes, there could be these bounces coming off and on. And I think today people are reacting more to the statement rather than anything else. And it's nothing to say that these negotiations will end or we will not have peace soon. So I'm still in the camp that we don't have any data points that say we are going back into a crisis. We are coming out of a crisis, which means crude prices should be, there should be more pressure for crude prices to go down. And because of that, we will see earnings to be better in this year. This year, Nifty earnings could be about 12% is what the consensus view is. But if you see mid caps and small caps, they are growing at high teens or early 20s. So there's a lot to choose from there in the broad market.
I'm going to pause this conversation for just a bit, Nimesh. Unfortunately, there's too much happening at the same time. I'm going to take a quick pause on this conversation, give you a bit of a breather. Go across. We're joined by Jay Bala from Cash the Chaos, and it's a great time to kind of figure out whether how much of this chaos is actually worth cashing into. Great having you here, Jay Bala. Give us a sense, this 2% fall, how are you looking at the index, the levels?
Hi, good to be on your show. I've been bullish on the markets for some time now. And when it comes to crude, when it was trading at about 100 and 110, I'd called for a crash in crude. And I still hold that view. And in fact, very recently, as the last couple of days, I had said the extreme short-term crude is oversold and it's due for a bounce. But the longer-term trajectory remains that crude hits below the December 2025 low, below $54, and probably much below that. So there's no change either in the view of crude or in the view of Nifty. I'm expecting record highs past 29,000 on the Nifty, and I was bearish on Nifty on one day after the top in 2024, when Nifty hit October 2024, and I turned bullish on the Nifty on the second week of April, and that view of Nifty heading to 29,000 in the medium to long term, that still remains.
29,000 on the Nifty, Jay, that's a level that you're watching out for, especially on a day where the market has seen such a sharp correction. Would it be right to conclude that you're looking at this market as a buy on dips market? And if so, what would be some sectors that are looking good on the charts?
See, that's right. See, if you look at the sectoral indices beyond the Nifty, we have seen BSE capital goods hit record highs, metals hits record highs, mid-cap hits record highs. We got the Nifty small cap 50 hit record highs. And so it's the broader market and the health of the market is very strong. And we have the Nifty next 50 hit 52-week highs. So the large caps catching up is just a matter of time. The reason why the Nifty large caps are held back is because of the weakness in the IT sector. IT sector probably has got one final low below the July low, but it's not sensible to preempt the market. Let the signal come from the market itself. Until IT reverses, there might be some drag on the Nifty, but I believe the April low of 22,182 on the Nifty, April 2026 low, that's not going to go. I anticipate in the very short term, probably a gap fill somewhere around the region of 23,500, and then the Nifty to take across the recent high of 21st April 24,602. I think that needs to be crossed for confirmation that the Nifty is heading much higher. So until that, there will be short-term, ambivalence for the large cap Nifty, but the broader market health is telling you that it's very healthy. In fact, I missed out the Nifty Pharma Index. Although that's a lightweight, that's also at record highs. So the health of, if you look at the markets beyond the Nifty, the markets are very healthy.
Hi, good afternoon. Sajid here. How do you look at the three top weighted stocks, ICICI Bank, HDFC Bank and Reliance? From a financial point of view, we've seen some kind of, build up to these stocks. Do you think that that will be a one important trigger now?
Yeah, absolutely. See, Reliance, HDFC Bank and ICICI are the elephants in the room. But, the banking sector is starting to look slightly better because we got higher highs and higher lows for the banking sector. And, if you look at the India 10-year bond yields, I had said a few weeks ago, in the middle of June, that the Nifty 10-year bond yields 10 years have got a double top. So, and I had projected a price level of about 6.6 to 6.49. So, when the bond yields drop, it helps the banking sector. So, what we are seeing today as the bond yields rise to about 6.759, it's just a counter-trend bounce. We still got juice for the 10-year bond yields to Indian 10-year bond yields to decline closer to 6.49. That will give tailwind for the banking sector. So the main worry remains to be Reliance. So until Reliance crosses 1345, it remains in a downtrend. The weight of the downtrend is still there. But even there, I don't see a downside beyond 1225 for Reliance. So Reliance is one thing that you need to be a bit cautious. So once that turns around, the whole market will turn around.
In today's market, you're seeing some bit of strength coming from Wipro, Bajaj, and ONGC. Otherwise, the entire Nifty pack is down there. What's yours? You spoke about Nifty IT as a whole, but some of the stocks like TCS, Infi, and Wipro.
Yeah, the IT sector is still not to be touched at the moment. If you are looking at IT sector, you need to look beyond the frontline names. If you look at something like Tata Technologies, that's the strongest within that space. But even there, we want the large cap ITs to bottom, then the mid caps can outperform. You can look at something like Newgen Software. If it closes above 537, until that you don't want to touch it. So IT is still an avoid, but I think it might be in the last phase of a climatic sell-off.
Jay, buy today, buy tomorrow. When do you go out, go long? Because the kind of knock you're seeing on the index today, should you go long today, wait a day or so, wait for more data coming in?
So like I said, the short term, there is ambiguity in the price structure.
Right.
So I would look for the markets to bottom the recent gap that the markets had in the early part of June. That was between 23,600 to 23,800. So this zone is likely to provide support for the market. If the markets were to turn around from this zone, then you got to get bullish. So there is a bit of wait and watch in the short term. But if you look beyond the large cap Nifty, I'm very bullish on the Nifty reality space. I'm anticipating it to go back to the 2024 highs. So that's and if you look at something like Phoenix, it's at the record highs. If you look at something like DLF or Prestige Estates, they are giving you excellent opportunities. So you got to look beyond the large caps names, but if you look at sectors that are going to do well, and I'm very bullish on the capital goods space, including energy and different stocks. So I expect BSE Capital Goods Index to clock something like 72,000 and then reverse and head to something like 99,000 from a 3 to 6 months perspective.
Jay, thank you. Thank you so much. We'll let you go on that note. In fact, we were in conversation with Nimesh and he mentioned about that one statement from President Donald Trump where he declared that the Iran ceasefire is over, saying the US has launched fresh strikes after Iran allegedly targeted ships in the region. Trump also renewed criticism of NATO allies over their stance on Iran and accused countries, including the UK and Italy, of not allowing the US to use military bases. Listen in.
To me, I think it's over. I don't want to deal with them anymore. They're scum. You know what scum is? They're scum. They're sick people. They're led by sick people. And they're vicious, violent people. And if they had a nuclear weapon, they'd use it. As far as I'm concerned, it's over. I'll speak to our negotiators. They want to negotiate. They're good people. Steve Witkoff, Jared Kushner. But they have to come back to me. As far as I'm concerned, it's just a waste of time dealing with them. They're liars. We make a deal. And if I make a deal with him, we have a deal. And he goes out, he talks. We make a deal. Everyone's agreed. No nuclear weapon. We make a deal. They go outside, talk to the press. They say, we never even talked about it. There's something wrong with them. They're cuckoo. As far as I'm concerned, it's over.
Talks won't resume after we get through the funeral proceedings. Does this mean that talks with Iran will not resume?
I don't care. They can talk, but I think they're wasting their time. They're a bunch of lying guys. I do my whole life. That's all I do is deals. My whole life is that's how I became president. I guess that's a deal too, right? but I made a lot of money. I had a lot of great success, tremendous success. Everything I did, I was successful. And I deal with these guys, and I say, this is from a different school. They're liars, they're cheats, they're sick people. They've hurt their people. They killed 54,000 people as of now that were protesting. You know, when people say, how come they haven't taken over? They can't take over because they're dead. They killed them. Nobody's going to take over. They have no guns, and the other side has machine guns. And they're killing them. The press doesn't report it. But they're bad people. They're bad people. And frankly, I don't want to waste my time with them. Now, I'll let our wonderful negotiators keep talking if they want, but I don't see it. I don't like these people. You know that? I like him. I like the leaders. I think all of these leaders.
Great. And they love him.
I think they didn't treat the United States fairly for many years, but that's okay. But they're sane, rational, good people. Most of them. I don't like a couple of them, to be honest with you. But there are a couple I don't like much.
That was President Trump talking about the ceasefire. He's saying it's over, and as a result of which we have seen the crude jump nearly 5%. We still have Nimesh Chandan with us. Nimesh, are we also seeing margin trade triggering here? Because if you look at the margin book, Reliance had the highest margin book of nearly over 2,000 crores, followed by Infi at 1,800, TCS at 1,500, and HDFC Bank also has around 1,500 crores of margin book there. The sudden fall, do you think that that's also one of the triggers why suddenly we've seen a lot of pressure on the market?
So that's very interesting, because one of the things that I worry about is leverage in the market, and whether it is higher volumes in futures and options or higher volumes in margin lending or loan against stock. These are things which at some point of time, because of stop losses that people hit, these are forced sellers when there is a downturn, and time is against them, right? These traders can't wait for a longer time, and at some point of time something is triggered, and especially in a volatile environment, there are many times that many of these traders get whipsawed or the stop losses get hit, and that creates more volatility in the market, hitting ultimately somebody else's stop loss. So yeah, this is one area that actually is adding to the general volatility, and specifically towards the downside. Because when these stop losses get hit, there is a pressure more on the downside rather than it hitting pressure on the upside.
And you think that because of the kind of buildup which has happened, now the margin book is roughly around 1.34 lakh crores. The large caps are at risk because of the kind of, the domino effect that comes into play here.
See, at some point of time, intraday, anything can happen in terms of margins and volatility. But if one segment is getting affected, it does affect the movement in the other segment as a comparable valuation or comparable movement. And then somebody can take profit from there to buy into another. So it may start with maybe large cap, but I don't think, or specific stock, but I don't think it is, for the short term, it can spread there. And especially when events like these, which affect the overall economy and the crude prices that affect the overall economy, it is possible that each segment is getting affected. Today, I think all the indices are equally down, whether it is large cap, mid cap, or small cap.
Nimesh, what's the view on IT at this point?
So now we are at a dilemma where we've been bearish, we've been underweight all this time. Now the valuations get a bit tempting, and see, there is a difference between the promise of AI and what they are delivering currently. There will be some time gap between where they deliver their promises. Till now, we have been actually in AI adjacent trades, like, for example, power sector, data centers, those trades we have taken positively. We've been underweight on the IT side. Now, frankly, valuations are tempting. These companies, unfortunately, still have a very cyclically slow growth rate. Maybe a statement like I'll wait for the quarterly numbers and the commentary and then decide on them is better rather than jumping in and catching the falling knife now.
Understood, and really appreciate your views. Thank you so much for your time today, Nimesh. So good to be speaking with you, especially on a day like this where we've seen such sharp cuts coming in on the Nifty. But your view is sounding positive, and thanks for sharing a bunch of your sectoral views as well. Thank you so much for your time today. Viewers, on that note, time to slip into a very short break on this edition of Closing Trades. On the other side of this very short break, we are going to be joined by Mr. Probal Sen to try and understand how to position yourself, how to be looking at the OMCs as well as the upstream refinery companies, and more importantly, how to look at the entire oil and gas space given the sharp spike that we've seen in Brent crude prices. All of this and more on the other side. Stay tuned. Back with Closing Trades, and we've got Mr. Probal Sen joining us on the show just to set up the context right now with everything that's happening geopolitically on the back of Donald Trump's comments. We've seen a sharp spike coming in Brent crude prices, about 5.5 to 6% higher right now. $78 thereabout is where Brent crude is. It's already up 5% today. Remember, this follows a move of above 3% yesterday as well. That's the kind of spike we saw on crude last evening. And after it reached $71.6 a barrel on 1st July, it has rebounded after that. So that's the recent low that we've seen on Brent, 71.6. If I have to talk about the year's high on Brent, that was hit on 31st March of this year, where Brent was at $118 per barrel. From there right now, despite this spike, we are still down 34%. If I have to talk about the recent high on Brent on 3rd June of this year, $98 a barrel is where Brent was, and despite this spike today, we are still lower by 21% from that recent high. Of course, the context behind this and the trigger behind this is Donald Trump saying that it does seem that the US-Iran MOU has come to an end. He does not want to negotiate with Iran anymore, and that third round of talks that they were going to hold in Switzerland, that perhaps may not happen, is at least what the street's understanding is, because now that is into hot water right now. On the back of all of this, how should you be looking at Brent crude prices, and more importantly, how are some of the oil sensitives expected to be affected from this? Let's welcome on board Mr. Probal Sen, VP of Equity Research at ICICI Securities, joining us on the show. Probal, hi, good afternoon. Opportune time to be speaking to you. Give us a sense on, first, what are some of the worst case scenarios that you're penciling in for Brent? How bad before it starts getting better? Okay, I believe we've lost that feed with Probal. We're going to try and reconnect with him. In the meantime, I want to take a look at what's happening with the charts of HPCL, BPCL, IOC. The OMC's end of the basket, want to see what's happening on that front. HPCL, remember, was lower by about 3%, was one of the top Nifty 500 losers today. That pressure on that stock has intensified, 5.5% cut over there. BPCL is lower by about 4%. Let's pull up IOC. And on the flip side, I also want to see what ONGC, Oil India as well as Chennai Petroleum, the upstream companies, are doing. ONGC is holding up solid well right now, 1% higher over there. So, of course, higher crude prices are beneficial for companies like ONGC. We've got Mr. Probal Sen back. Probal, hi. I was asking you about the worst case scenario that you've penciled in for crude right now. When do things start looking tricky for crude sensitive companies? At what level will you be sounding caution?
Yeah, thank you for having me, and sorry for the slight delay.
No worries. Thank you so much.
The current crude levels, I think, thanks to the 7.5 rupee price increase plus the changes in excise made, the break-even cost of crude has definitely gone up quite a bit. So our sense is that even at these price levels, the OMCs should continue to make reasonably high retail margins, particularly given that there is some sort of a cap or some sort of a negotiated pricing, from what we understand, at which refineries are transferring the diesel and diesel and petrol rather, to the marketing divisions. So to that extent, I think till crude is maybe about $80 to $83, the retail losses should not actually once again start expanding. So that could probably be a short-term, cap in terms of, where we think earnings can still be protected. Q1, of course, is still going to be fairly weak, but the numbers that I'm talking about is more from a Q2 onwards point of view. So anywhere between $82 to $85, if crude basically sustains at that level, I think OMC should still continue to do reasonably well, particularly given that refining margins are still holding up. at fairly strong levels. Even factoring in a cap, refining GRMs for OMC should not dip too much below double digits. Again, for 1Q will see inventory losses as well. So I would leave that out of the equation, but I'm talking about the situation as it stands now.
It's given that Q1 would be a bad quarter for the OMCs, especially from a loss point of view. But the market was penciling in some recovery from second quarter onwards. Now, do you think that given the kind of spike which we have seen, the geopolitical commentary which is coming in, is going to be a difficult second quarter as well?
I think you've got to sort of there are two factors here: whether this action that has happened today and yesterday from both the sides and the commentary that is there, does it suggest a re-escalation or a resumption of full-blown hostilities, or does it still sort of indicate some sort of saber rattling in terms of the negotiations that are taking place, albeit we don't know what the status is right now? Because remember that the MOU that is there, or the framework that is there, there have been differences from day one in terms of the exact content of the framework itself. Iran has consistently claimed that control of the strait is one of the cornerstones, of the MOU, while the US has said that the strait has to be free of any interference by any country, and the flow has to basically resume to pre-war levels. So I think this is basically, if this suggests a resumption of hostilities and crude prices go back up, to the beginning of the conflict, then of course, the equation completely changes, and you're back to massive losses being incurred by the OMCs, and prices going up across the board for crude and products. Having said that, I think what is also important in this time around is that if you look back at the conflict beginning, there was a little bit of cushion from the point of view of strategic reserves, which were released gradually, more than 300 million barrels as per industry reports, and the kind of collapse that's happened in Chinese demand. Whether that's a reduction in demand or whether that's a release of their undisclosed inventories, we don't know. But those factors actually helped cushion the crude prices from spiking even when the strait was closed. This time around, assuming that the strategic reserve cushion is less and China may come back to the market at some point, there could be material spikes if the flows from strait completely close down again because of the risk. So we're going to have to sort of wait and watch how this plays out over the next couple of days.
How large is the risk, Probal? Say it unwinds, goes back to the strait shutting down. What's the downside risk to crude this time around? Because the reaction may not be as knee-jerk as the last time around.
Yes, as I said, I think the reaction of the market may not be as sudden. It probably will be gradual, but as I mentioned, that it really boils down to what situation the inventories are in globally at this point of time, and whether the strait will actually end up completely shutting down, where you had one or two cargoes actually exiting at the peak of the conflict versus the, I think, 20 to 25 cargoes that have been transiting the strait, whether through the Omani corridor or under Iranian observance and under Iranian conditions. I think that is something that we'll have to see. Otherwise, if you're talking about the strait getting completely closed down, then at the end of the day, 11.5 million barrels a day is what has been compromised. If you factor in the alternate supplies through the East-West pipeline and through the Fujairah corridor by the UAE, that accounts for about 6 to 7 million barrels of the 18 to 19 million barrels a day that was transiting the strait prior to the conflict. So if you go back to that situation without the cushion of the reserves, you can actually have a sharper spike in some ways if there is no sort of solution seen to the conflict. So, as I said, we're going to have to wait and watch at this point of time.
Oh, okay. And Probal, for someone who's looking to have exposure to oil sensitives right now, would that be something, A, that you would recommend at all? And B, if yes, how best to play this dip that we've seen when it comes to OMCs? Or rather, the spike that we've seen coming in on in favor of the upstream company, should that be bought into?
See, I think with upstream, the numbers are very clear. Whichever way you look at it, if you build in a range of anywhere between $75 to $85 of crude for the full year, you're still looking at net realizations being at a 7 to 8 year high. Taking out the one instance where the Russia-Ukraine conflict took realizations to more than $100 for one quarter. If you take that out over the last 8 years, the net realizations will be probably at the highest point for this financial year. So very clearly upstream from an earnings standpoint stands to gain. However, what we have seen in recent times is that focus has increasingly shifted on operational improvements actually being visible from a production standpoint, specifically for ONGC. So I think that is something that can probably be a balancing factor from a sentiment standpoint. I would also look at the gas space. My sense is that even if Qatar actually doesn't come back into the market in a big way because of these disruptions, there is still probably enough of LNG supplies that is coming on stream over the next 9 to 12 months from alternate suppliers, specifically the US, which should actually bring prices to a more moderate level from the $15 to $16 that you're seeing for LNG right now. So from a 1 year perspective, even assuming that the conflict once again escalates, I would say gas names probably should be still doing better. We would still believe that LNG prices should moderate as a higher supply comes in, and upstream can probably see uptake as operational improvement probably is seen over the next couple of quarters. OMCs right now, I think prices are definitely attractive. As I said, margins are still holding up, but maybe the fear of crude once again going back to 85 plus levels is what is reflecting in the prices today.
Okay, Prabal, how do you look at some of the petchem cracks at this point in time, especially from a Reliance point of time, from Reliance point of view?
Reliance is on a restricted list, sir, to be honest, because we are part of the Geo IPO, so I wouldn't be able to comment on it. But from a broader perspective, from a petchem margins perspective, definitely the integrated margins have seen a spike over Q1. And what we are really seeing is that a significant part of global capacity is still, out of commission, specifically in the Middle East. If you look at the Sadara complex as well as the Jubail industrial complex, both of them did host a whole lot of petrochemical capacity, in addition to being LNG, being centers of LNG supply as well as crude and products. So to that extent, I think the demand supply balance has definitely tightened a bit across petchem chains. So we would expect margins to probably hold up at slightly higher levels than what we've seen over the last couple of years, where they have been at, frankly, multi-year lows for a very long period of time.
About gas supplies, while Qatar has been hit, we have been able to source our gas from the US, where 30% of the gas is now coming from US. Has that changed the dynamics from the margin point of view for many of the city gas companies or gas companies?
Honestly, I think if you look at Henry Hub prices, they've actually not, been fairly independent of what has been happening in the Gulf, and therefore pricing. If you assume a Henry Hub base price of around $3.50 and take Gale's contract with Cheniere as an example, you still get gas at somewhere around $11 on that basis. Now, of course, you have to sort of factor in whatever marketing margins are being charged on top of that. In the current environment, which we're not really aware. But if you compare that to spot Asia prices, which are at about $16 odd today, it definitely presents an advantage as long as additional supplies can actually be sourced. And, that supply continues, which is what I mentioned earlier, that by the second half of this calendar year, there is definitely another 30 to 35 million tons of LNG export capacity that could actually come on stream, which should help alleviate the supply crunch that the world is seeing because of Qatar Energy's disruption. So it can only actually get slightly easier from a pricing perspective from what we can see today.
Okay. Thank you so much, Prabal, for coming in and speaking to us. Of course, on a day like this, it's great to get your perspective as always.
All right. Thanks.
All right. Let me bring on board Shrikant Chauhan of Kotak Securities, who's been waiting by very patiently. Thank you so much, Shrikant. It's just that kind of a day, right? What are the levels you're looking out for? 2.5% lower. Can we hold?
Yeah, no problem. I can understand. Because in this type of market, what is important is that what is happening in terms of economy related issues and maybe global macros and all. But technically, the market has broken important support level 24,000 decisively without any like pullback and all. So it clearly indicates that we are heading lower. But at the same time, 23,800 acted as major support when the market has started this rally. So we need to see that whether the market is breaking and closing below this 23,800 or not, because right now the market is down nearly 500 points. And whenever we see sell-off more close to 400 points, 450 points, we see some rebound in the market. So I am of the view that we can again see the levels of maybe 24,000 or maybe 24,200 in the best case scenario in the near future. But the way the fall has happened, I think we are heading towards the levels of maybe 23,500 in next few weeks of time, maybe 1 or 2 weeks of time. And in the very short term, in one or 2 days of time, we can see some rebound in the market.
Okay, so a rebound and thereafter a test of 23,500. Is that the way one reads it?
Correct, absolutely.
Okay, and what will, which will be the sectors which will outperform, underperform? If you can give us some flavor around your view with regard to sectors.
So again, oil sensitives will come under pressure. And in that, we can expect weakness in Indigo. We can expect weakness in maybe capital goods or those companies which are sensitive to the Middle East business like Larsen. There also we can see some weakness because all these stocks rallied during this last 2 months of time. But now because of this specific news flow, I think we can see again good amount of liquidation of long position or profit taking in these companies. So Indigo, Larsen, HPCL, BPCL, this type of stocks can fall further. We can expect activity in large cap private banks, not PSU banks. Private banks, they are showing tremendous strength. Currently, of course, they are down along with the overall weakness in the market. But in case if there is any rebound, then we can bet on HDFC Bank as well as ICICI Bank from current levels. We can expect at least 3-4% sort of upward activity in the near future.
Okay. And Shrikant, since you are expecting to see a recovery in the market or turnaround rather in such a short time frame, other than some of the stocks that you've spoken about, how best should our viewers be prepared to face that kind of spike that we're seeing? In terms of, I'm asking you this question, is what should they buy today and keep ready for that spike that you're expecting to see in the next couple of days?
No, I think, see, like what we can do is that we can keep a stop loss at 23,800 on a closing basis. And we should look for adding those stocks where we saw performance. And if we consider the performance of last, let's say 1 month, then in that private banks did really well. In that ICICI Bank, HDFC Bank, there we saw good amount of strength. Already metal stocks have fallen to their extreme levels from the highs. We can expect further more weakness, but in that particular space, we like aluminium stocks. So like Hindalco, Nalco, they're also, even at these levels, if there is a like specific view of taking short-term trade, then with a stop loss at 23,800 on a closing basis, we may even look at buying Hindalco as well as Vedanta Aluminium at current levels. There we are expecting some upside. Apart from that, few capital market related stocks. In that, we like Angel as well as we like few AMC companies in that HDFC, AMC as well as NAM India. I think these are the stocks where we can expect some buying interest in this current fall. But most of the capital goods have reached to their fair values in this particular up move. So there we can expect further more weakness. Auto stocks will remain more and more sensitive to the overall performance of the crude prices. So in case crude prices remains at $78, $80, then we can expect again one more round of downward trend in all the auto companies. There we are bullish with a long-term view, but with a very short-term view, again, because of the rise in crude prices, we can expect some weakness. So I think there are very few stocks where we can take long bets like metals and private banks.
Shrikant, how do you look at the PSU banking space? That's the most hit today. If you look at the PSU banking index is down nearly 2.76%. The SBIs and other companies, how do you look at them?
So there also we are expecting further more pain. The reason is because in this rally, if we consider their relative strength, then they were completely underperforming. They were relatively underperforming to the overall performance of the bank Nifty. And that was the clear indication that in case if there is any weakness in the market, then we can expect sharp weakness in all the PSU banks. And today we are witnessing the similar sort of activity. So I am of the view that from here, Bank of Baroda, which is currently around 240, there we can expect weakness up to at least 220 or 210 in the near future. So the possibility of 10 to 8 to 10% is not ruled out. For PNB also, there also we are expecting some weakness, but PNB is relatively better than other PSU banks. PNB is down today. It is close to 101, 102 sort of levels. But there we are expecting at least 96, 97 sort of levels. But Canara Bank and State Bank, I think these are the two stocks where we can expect good amount of weakness in the near future.
Coming in on some of the PSU banks, SBI and Canara Bank looking good to Shrikant. Shrikant, stay on with us. It's time to slip into a very short break. Before that, I just want to take a look at what the global markets are up to right now. European markets, stock 600 itself is lower by 2%. DAX seeing a cut of 2.5% as we speak. FTSE is lower by 1.5%. CAC, which is France's index, the CAC 40 is lower by 2.25%. The pre-market, the US futures are also right now under deep pressure. You've got a 1.5% cut coming in on the Dow as well as Nasdaq, and a 1% cut coming in on the S&P futures right now. Oil prices for Brent 78.9, so we're very close to $79 a barrel once again on the Brent. It's a 6.5% uptick. WTI very close to 75. Another 6.5% uptick on the WTI as well. On that note, time to slip into a very short break. We'll keep the conversation going on the other side with our experts. Stay tuned. Back with closing trades, just taking stock of what the market is up to right now. The cut has intensified in the last 1 hour itself. Every 10-15 minutes, we're doing a check on the Nifty. Right now, it's lower by 2.25%. It's a 535-point drop coming in on an intraday basis on the Nifty right now. 23,861 is where we're at. So 23,900 is also a level that we've not been able to hold on to, and that slip in the downward direction continues. Let's take the conversation ahead. We've got Mr. Rajat Sharma, founder and CEO at Sana Securities, joining us on the show. Rajat, hi, good afternoon, and good to be speaking with you. You know, last 15 minutes of trade, and in the last 30 or 45 minutes, we've seen mayhem play out on the street. What is your view in the near term when it comes to the market? Do you believe this cut of 2.25% is as bad as it gets, or do you believe that there is more trouble in store?
Good afternoon. Well, first of all, thanks for having me on the show. Personally, my sense is this is as bad as it gets. In fact, going by what's happened recently, there could be a bounce back in the market, because this is clearly, you know, buy on Trump kind of market. Whichever day he wants to start a war with Iran or wants to end a negotiation, it's actually proved to be a good day to make some buying in the market. Be that as it may, you know, I don't look at short-term movements like these or news-based events to buy into markets. Look at the overall valuations. Look at where Nifty is right now. Look at the discount at which we are trading over, you know, the last 5-year or 10-year period. Look at the sectors which are looking the most attractive right now. Those are the bases on which I, make a decision to buy or sell. But to answer your the point where it could go in the next week, 2 weeks, or 3 weeks, which is short term, who knows? Maybe, Trump comes out and says something even more disastrous and markets fall another 2%. But if that happens, then the bounce back would be equally sharper. So, my sense is it should bounce back.
Rajat, in this entire mayhem, are there any sectors that you are looking at? Because we've seen cuts across the board. There's earnings season which is coming in. We had outlook from the financial banks and financial services which looked very good. Is there a pocket where you can use this opportunity to buy some stocks?
Well, my favorite sector right now is IT, and it has nothing to do with this war or what Trump says week on week. It's just a sector which I feel is extremely, extremely cheap right now. And why I like it right, look at a stock like Infosys. It has fallen from about 1,600 level to 1,000 rupees. The interesting thing is that everybody keeps talking about Indian IT losing market share, which does not seem to be happening. If you look at the top line, the sales number quarter on quarter for Infosys itself, barring 2023-24, there was a period when they were growing at about 1 or 2%. They're actually growing at a very good rate. They're growing 7 to 8%, and last quarter they grew around 13%. That's their top line. So while sales keeps increasing, the stock price keeps falling, which is bizarre, which is typical of markets where everybody is trying to follow a trend. It's a sentiment-led fall that AI would replace everything, while in reality, Infosys and TCS and all these companies keep getting order after order. Infosys itself in last con call, they got orders from Ralph Lauren, Hertz, British Petroleum, but TCS itself got orders from a Danish insurance company, the National Health Services in UK, Gas Authority of India, and all of these are AI transformation orders, AI-led orders. Look, I'm not making any point that these companies would grow at the rate at which they grew in past. All I'm saying is for these companies to be justified with the earnings that they have right now, they should be trading 60 to 70% higher than where they are right now. And that's purely based on where earnings are right now, even if the earnings do not improve. So IT is, of course, my favorite sector right now. The other places where we're putting in more money. Just today, I bought, as a disclosure, I bought myself and for my clients Tata Motor passenger vehicle. HDFC Bank is a stock that I really like because I believe that FIIs will at some point come back. They're missing from the markets. It's available at a price to book of about 2, which is, for a premium bank, as cheap as it gets. It's a favorite bank, favorite stock for FIs once they come back. So essentially, it's within the large cap space, some of the top Nifty companies which are available very cheap.
Okay. And Rajat, what about metals? Where do you sit at on that call? And why I ask you this is because we've seen maybe a 10 to 15% correction in frontline metal names starting to look attractive.
No, not really, because I thought that the metal stocks had already run up a lot, and given the kind of debt levels that they have on some of the metal companies, I didn't see that there was enough value for me to pick up any of those metal stocks. Steel Authority of India would be my favorite if I had to buy any of the metal stocks. I prefer a government company in that space over one of their private counterparts. But right now, I still find it very attractive. This is 10-15% fall would probably not cut it. It has to fall a lot more from where they are. Two sectors which I feel are extremely expensive: metals and defense. I think very, very overvalued.
The other one is GeoFin, and I'm curious to know, Shrikant, how does this one look like on charts? Stock down 5, it's now at 230 levels. Seen a very, very decent correction. Frontline Nifty 50 name. What next on this one?
Yeah, absolutely. This particular stock is into corrective mode. And today, because of some block deal, the stock has fallen sharply from the highs of 235, 240 to almost 225. But while looking at its entire technical structure of last, let's say, 4-5 months, then it is into corrective mode. And at this level, it is quite attractive. So between 230 and 220, it's a buy with a target of not more than 260. So between 250, 260, again, we should look for taking some profit. So it's a range bound stock. And because the stock has spent a lot of time, I'm of the view that the downside is definitely limited. The only thing is that we need some patience and courage to buy and hold.
Okay, so that's the take coming in on some of those names on the charts, and especially Geo Financial. Kunal, there's been a lot of chatter around the metal index. We've heard a lot of diverse views coming in on metals. On the charts, how are some of the metal names shaping up, and which would be your top bets from that basket?
See, frankly, after this 20% odd correction for metal index, it's a good time to chip into this space. The Nifty Metal Index constituents, I think, look at Hindalco, Vedanta, etc. These stocks have corrected around 20% to 30% from their recent swing highs. Some of them have come back to their 200 moving averages. So if I have to take a pick on the metal pack, I would definitely look at Hindalco at the current juncture. That's a stock which I think at 960, 970 looks attractive. Metals apparently generally play out to be a good bet, especially on those recent past times which you've seen in the month of February and March, when the markets were too heated up with respect to the commodities moving up significantly higher. So I think in that anticipation, Hindalco could be a good bet. Tata Steel at 190 levels could be a decent contra bet at the current juncture. SAIL is something which I would keep an eye on, specifically with the stock heading towards the initial breakout about 210 mark and then ebbing off from those 210 levels to 160, 158 levels approximately. So I think at the current juncture, even this stock looks attractive.
And Kunal, support on Interglobe at what level?
See, I think 4700 is a major support for Interglobe Aviation. Of course, it's far off from the current market price for the stock price, but that's a critical support because the earlier breakout point for Interglobe Aviation was around this 4600 mark, and post that breakout is where you'd seen almost like a 10 to 14% jump for Interglobe Aviation. So on the way down, assumingly if things deteriorate, say for the short term, I think a dip towards 4700 approximately should be taken as a good buying opportunity.
Srikanth, any BTST, STBT ideas that you can give us?
So at this juncture, if we have to consider any STBT idea, because the tone of the market has turned down, we can see some rebound, but after completing the rebound again, we can expect a downward trend in the market. That's my view. So based on that, at this level, Larsen, there the stock has formed lower top bottom, and despite there was like upward activity in the market in last 3-4 days, we saw good amount of underperformance for Larsen. So there we are expecting further more weakness. Currently it is around 3,900. The stock can fall to 3,800 or 3,700. We can keep a stop loss around 3,950 for creating any short position. Apart from that, I think pharma companies, there we can expect upward activity. And in that specifically, we like Sun Pharma. There we have a target of close to 2,200, 2,250 based on its long-term chart, but with a very short-term view. And because the stock has corrected to its support levels, at these levels around 1890, 1900 level, it's a buy with a stop loss at 1860. And we can keep a target of again 2000 on the higher side.
Srikanth, thank you very much for joining us today. Rajat, what's your take on some of the exchanges, BSE and MCX?
Oh, no, nothing special there. I have other financial services stocks which I would prefer to buy at this point. So no view on BSE or MCX. I'm not looking at it.
And Rajat, what would those stocks be?
No, so as I said, I'm looking at buying frontline banking stocks. HDFC Bank and Federal Bank are the two stocks which I have and I've recently added as well. Pharma is another sector which I really like. Within pharma, recently we've added Natco Pharma, we've added Zydus Life Sciences to our portfolio. And as I said, just today I've added Tata Motor Passenger Vehicle because I was looking at their numbers. Essentially, it's a JLR story, 86% revenue, still Jaguar Land Rover. Jaguar Land Rover had its own problems last year, but now, they've cleaned up things. They're actually in the best shape that Jaguar Land Rover has been in the past 10, 15 years. They're coming out with a fleet of new cars, premier segment electric vehicle. And within the Indian space, the 14% revenue that comes from India, Tata Motor Passenger Vehicle today has about 64% of its revenue coming from EVs, and it sells twice the number of EVs compared to its rival Mahindra. And EV is the future. This is what's going to happen going forward. So from the auto space, I've added Tata Motor Passenger Vehicle. So these are some of the stocks we've recently added. In addition, there are some small cap stocks which I cannot talk about because of compliance reasons, which we've added to our portfolio, but they come again from pharma space and from textile space. So select stocks we've added, but in terms of sectors, pharma, IT being my favorite, private banking, and auto space, as I said.
Understood. Thanks for that lowdown. And in fact, since you've spoken about Tata Motors PV has outlined its growth roadmap at its annual general meeting. And Shailesh Chandra, the MD and CEO, said that the company is targeting 20% market share from the current 14%. He also said that the company is taking a strategic call to re-enter the South African market. In fact, listen into what he had to say.
Revenues are expected to grow from around 23 billion pounds to 26 billion pounds, EBIT margin to move to 4%, and free cash flow to reach break-even as JLR continues to invest to drive growth. We also took a strategic call to re-enter the South African market with our bold portfolio, which has resulted in our IB volumes growing fourfolds. We are targeting 20% market share by FY31. This implies a volume of over 1.2 million units, which translates to a volume growth of 15% CAGR. In terms of products, we will expand our portfolio with 6 new nameplates and over 20 refreshes and facelifts. 5 key enablers will underpin the growth: multifold expansion of sales and service network, additional 4 lakh units of manufacturing capacity, accelerated quality and after-sales transformation, and double-digit EBITDA margins driven by operating leverage and cost reduction initiatives. By FY31, TMPV aspires for rupees 140,000 crore revenues, double-digit EBITDA margins, and over 5% EBIT margins, driving PBT to over 5 times the current levels. This will be supported by investments of nearly 40,000 crores in products and manufacturing capacity, while generating cumulative free cash flow of rupees 10,000 crores.
That was Sailesh Chandra talking, speaking at the Tata Motors PV AGM today. But look what's happening in the F&O market. We got a smart rebound, nearly 110 points rebound from the day's low. We are back about 23,900 levels if you look at it from that point of view. Also, if you look at the Nifty is still down nearly 2%, but look at the open interest positions, which is the 8% jump in positions. So the kind of shorts that got built up in the last 1 hour, especially from 1 p.m. onwards, that's what it indicates. The shorts suddenly coming in and pushing the market lower there. Nifty Bank again, is down nearly 2.4%, led by the PSU Bank pack. There also open interest positions have gone up by nearly 5%. So the shorts getting added there. If you look at the constituents of Nifty Bank, that's across the board. There's a long unwind which is happening in HDFC Bank and ICICI Bank there, but shorts getting added in SBI, PNB, and Bank of India. So the PSU Bank under pressure there. Look at call and put writing. We saw the VIX climbing nearly 30% in today's trade, and as a result of the call writing, that's what we are seeing. 23,900 levels is where a lot of call positions is now coming in. 23,900, 24,000, and and the above strikes which is there. But distribution wise, we're trying to hold on to the 23,900 level at this point in time. But 24,000 it becomes the next. Next resistance for the market there. Futures gainers include stocks like Kalyan Jewellers, MCX, and Nalco. While on the losing side, you had stocks like Jubilant, L&T Finance, and Emphasis. So Kunal, 24,000 now the next resistance.
Yeah, I think and looking at the built up in terms of options, I think it's been a major strike which the markets would try and take resistance at. But what's quite stark in terms of the built up, I was looking at the options data which you flagged up also earlier. The strikes at 24,200, 300, and 400. I think I've seen a huge built up of open interest, and I think majority of the open interest today, I think cumulatively has added up into these 2-3 strikes, which means that the region where we were trading for the initial part of the day, the first half of the day, that actually became a major point where the markets have taken huge shorting in terms of call options. So that actually should remain as a major resistance point for a good part of this remainder of this week as well as next week's start.